Hello, dear students. AFM paper happened today. Very warm welcome. So, three things before I move further. First one was I had a very brief glance at the rest of the questions. Some questions directly came from what we discussed. In fact, quite a few questions came from what we discussed, what I gave in revision videos and all of that. And some questions, specifically, I think there was one question which came from that optimal portfolio, which I specifically said don't study. And I also said that, it's a question that you should leave because it's a very lengthy question. Okay. So keeping that aside, I think still the question paper was on slightly higher than average quality question paper. Now let us move to the MCQs. MCQs also, they actually gave a slightly, what can I say, a bit twisted. Some, workings can be slightly debated. And quite a few students, I'm sure, would have spent a lot of time. So let us look at the MCQs first. So first, looking at the MCQ, first one was this fate of forward contract. This I have told multiple times that this question is, it is possible that this question can appear. So that question did eventually actually appear. Just hold on for 1 sec. Not sure why this thing is not appearing. Just 1 sec, boss. I'm just trying to fix something. My screen is not appearing properly. Yeah, I'm sorry about that. I'm not sure why there was an error on the screen. Okay, so the first one is interest payable? Yes, answer is A. Interest payable 955 is the interest that is payable. Second one is what is the net conversion rate? 86.8662. Answer is D here. Then we have a swap loss. Swap loss is 32,500. Now, please note, I made this based on certain assumptions. The student here probably had a slightly different one. But these are the answers that I think are appropriate. Then, I am working for this also. I'll be obviously uploading this sometime soon. Then this is actually a straight question from study material. And, they have given this question as part of study material. And from there only they picked it up and gave it. So the answer for this is, you get first this expected return on market portfolio, you get it first as 15.88, and then you work backwards. So answer is C here. And then you get, because they said simple average, you have to take the simple averages of beta. So there you'll get 15.52, and then expected return on shares of C is 15.74. Answer is B for question 4 and D for question 5. Okay, then we move on to Ujjwal Bank and Suraksha Bank. Now, this was a twisted MCQ, specifically because they have given here CRAR as -2. Now, that is we have never looked at swap ratios with negative numbers. Okay, so what you actually have to do is, the one below CRAR and NPA, one of them is 6:1, other one is 6:1. Please note, NPA, lower the number it is, better it is. Okay, so they both actually get cancelled out. When they both get cancelled out, whatever is the balance, those book value and market value is what gets allotted, and there you get 4,000 shares. So the total share count will be 54,000. So let me look at the answers here. Yeah, 4,000 shares, and total share count is 54. That is 50,000 plus 4, 54,000. You divide 6 lakhs of the PAT by this, you'll get 11.11. So answer is A here, question number 8. Then question number 9 is 0.2, because out of for 20,000 shares, you're allotting 4,000 shares. So that is 0.2. They would have worded this sentence better, but unfortunately, that is what it is. Then moving forward, case study number 4. This one was a very simple question. I don't know why they asked this in at final level. So the answers are, for question number 10 is B 8 lakhs, then 11 is 4 lakhs, and 12 is 4 lakhs. This one I'll not get too deep into it. So these are the solutions. Then case scenario number 5. This one could have been slightly tricky because the way they made the working is not clear. So I'll tell you one trick here. See, first of all, clean price and dirty price. Clean price is given, so dirty price has to be added to it. So obviously, if you subtract, the answer is incorrect. Okay. Then second, what we have to figure out is, whether it is 5822 or 7954. So I did basic computation. I was not getting, 5722. I was getting 5700. Here they gave 5800, but I was getting 5700. So that is how we chose option A. Okay, so we choose option A for question number 13. Then once you choose option number A for 14, the way you have to work is, the sale proceeds is equal to notional value into dirty price divided by 100. Here 100 will not be the price, it will be 1 lakh multiplied by 100 minus initial margin by 100. So you get this 5 crores 15 lakh 68 580. So that matches here. So this is the only option which has that. So you can choose option B. You can also work out this one second part, which comes out as, the whatever is the initial sale price, 1 plus repo rate. Repo rate is 6% here into days by 360, because they specifically said that we have to take 360 days. So there you get 5 crore 16 lakh 28,000. So you get 516 28 743. And finally, question number 15, it is reverse repo and repo. Okay, so this is how broadly the answers are. As I said, the question paper can be said, above average in terms of toughness. Probably it can be fairly tough, also depend, because these questions were slightly tricky, and the theory questions as well as the practical questions also, they have given quite a few of them in a twisted and unexpected manner. So I'll be coming out with the complete solution in a couple of days, and I'll be uploading it. This solution anyway, I'll upload it as part of the description of this video, so you can have a look. And so that's all the very best, and study well. See you then.